所有的血汗钱都可以骗我，骗的一分钱都没有。
800 incomplete projects, 1.5 million devastated homebuyers, 3.8 million job losses, and more than $300 billion in liabilities. Hey there, it's Darren, and here's what everyone's asking. What happened to Evergrande? Before we dive in, remember to hit like and subscribe because we've got the property information you need. Let's go back 100, maybe even 1,000 years to agricultural China. This is the story of land. For any Chinese person, it's an investment you can't go wrong with because everyone needs a home. Generational wealth is passed down through property, and in return, children grow up to take care of their elders under the roof they share. It has been woven into social status and family heritage. But around 40 years ago, two things happened that unlocked a whole new level of obsession with real estate. The first date to remember is December 18, 1978, the date that kickstarted China's economic revival and massive urban migration to coastal special economic zones like Shenzhen and Zhuhai. As 500 million people have been lifted out of poverty, their purchasing power has skyrocketed, while the faith in land is stronger than ever. Today, 96% of all urban households own at least one home. The second important date is September 25, 1980, the official start of the one-child policy. As sons were preferred over daughters due to economic and cultural reasons, the Chinese sex ratio got skewed dramatically. That's about 35 million more men than women. The impact of this is that the marriage markets have become fiercely competitive. And what makes a suitor stand out in Chinese society? I think we all know the answer. In fact, owning at least one property has become the prerequisite for men. 70% of Chinese millennials own at least one house, and 94% plan to buy a property in the next 5 years. But then you might ask, why are 1/5 of the houses in the country empty? That's 65 million units. Or why is China's landscape littered with ghost cities? And most importantly, why does China continue building? The central government is the big boss of China's administrative machine. It has a huge appetite, munching on 50% of total tax revenue. Meanwhile, all of its employees are left to fight over the remaining half, which clearly cannot cover their budgets. These local governments need another source of income. So what can they do? Two things. First, they buy cheap farmland, rezone it as urban, and sell it to developers at much higher prices. This generates much needed cash flow. Second, they set up local government financing vehicles, which are investment companies that sell bonds to finance the building of infrastructure. This is the debt funding many building projects. Now, it wouldn't make sense to build without any expectations of making money. That's where China's investors come in. Entrepreneurs, white collars, and blue collars snap up these apartments as fast as they come. What they don't do is live in them. In 2017, 47.1% of mortgages in China were taken out for vacant units. In 2018, out of all home purchases, 44% were for second homes and 25% for third homes. This is all a game of speculation. Everyone expects land prices to keep increasing because they know local governments keep land prices up by maintaining a tight grip on land supply. Since China limits investment overseas, everyone funnels their wealth into the most valued asset in the country, real estate. All of these factors come together to make real estate such a huge industry in China, accounting for 29% of China's GDP. It's why people in China save so much to fork out the 30% down payment needed for mortgages. It's why many people, from construction workers to real estate agents, have jobs to supply their families. It's why there's so much government debt and so many bank loans locked up in apartment and real estate projects. Everyone is affected by this industry, and that's where Evergrande comes in. Evergrande, once China's largest developer by sale, and now the most in-depth real estate company in the world. Founded in 1996 by Su Jiaying, companies like Evergrande create a steroid cycle built on pre-selling homes. This is when properties are made available for purchase even before they're move-in ready. Pre-sale money would pour in. The developer would then use it to take out another loan to purchase another piece of land, start a new project, and put it up for pre-sale. Step 1 to 5, rinse and repeat. A top property developer could easily hold up 500 billion yuan of pre-sale funds and have over 1,000 development projects under construction at any time. The fall began in August 2020 with China's announcement of the 3 red lines. The real estate sector had been a ticking time bomb for the past decade, built on a mountain of debt and propelled by collective speculation. For a central government that prizes stability, this was a problem. The three red lines are China's effort to deleverage the real estate sector. They are metrics that real estate companies will have to meet before they could borrow more loans. Now suddenly, Evergrande was facing a credit crunch. They couldn't borrow any more money before paying off part of the $300 million debt. So they started offering pre-sales at crazy discounts, selling stakes and raised an IPO in Hong Kong, scraping up some funds to get by. But bit by bit, payment deadlines would be missed and project sales would halt. Evergrande was facing a liquidity crisis, meaning that it had no money to pay back its investors and no money to complete the 1.5 million apartments customers have already paid down payment for.
Evergrande's struggle to reduce its more than $300 billion of debt has prompted fears of default might triggering a financial crisis.
A bad start to 2022 for China's Evergrande. The troubled property developer has suspended trading in its shares on the Hong Kong Stock Exchange. Evergrande has been ordered to demolish 39 residential buildings in the Chinese resort of Hainan because they were built illegally.
Finally, on December 6, 2021, the past caught up to Evergrande as Fitch Ratings declared the company formally default. Evergrande isn't the only company that's been hit. It's just the first firework to go off and the one getting the most media attention. Other developers who have been unable to meet the three red lines have started selling off properties to combat bankruptcy. More than a dozen have already defaulted. Bigger developers like Guangzhou R&F Property Company and China Ouyuan Group continue to face liquidity crisis and teeter closer to the edge. Even as market supply keeps increasing, demand has vanished as investors lost confidence in the real estate sector. Property prices have slumped and construction rates have slowed down. Consequently, China's GDP growth in Q3 of 2021 slowed to 4.9%, which is the weakest rate of growth since Q3 of 2020. And the future ahead doesn't look so good either. The Chinese property sector as a whole have debts totaling $5 trillion, and a third of China's property developers could continue facing debt problems this year. It's still uncertain whether this financial contagion could spread out to the rest of the world. The honey trap has become a bit of a pickle. But the Chinese government does have some tricks up its sleeves. It's trying to create diversity in investment so the pressure can be lifted from the real estate industry. Its Go Global policy has encouraged Chinese enterprise to invest overseas through construction and engineering projects. It's begun to consider lowering capital restriction by allowing individuals to invest overseas at a cap of $50,000. Already, many Chinese investors are investing in overseas real estate, interested in locations such as the UK, Canada, and Australia. Perhaps these are the beginning of a large shift in the Chinese economy. Real estate affects a big ecosystem, and Evergrande is only the biggest firework to go off. 1.5 million homeowners have still lost their savings on halted construction has robbed many people of jobs. And the future for much of the ecosystem is still uncertain. So, I hope you take away two key lessons from this situation. Number one, wealth takes time to build, but it can be lost at the snap of a finger. Number two, it pays to be prepared. Do your due diligence by keeping up to date with the economy and looking ahead. So where do you think the Chinese interest will go now? Which country has the most promising real estate market today? If you want to learn answers to these questions, remember to keep up with us by signing up to our newsletter and following our social media pages.